Hi guys, today I will be giving you a tutorial on how to use the TFA Fractal Support and Resistance Indicator. This indicator is really good in finding areas of support and areas of resistance. Notice I say areas and not just levels because in the world of Forex, it is more important to focus on areas instead of just specific levels. Alright, so first things first, you'll notice that resistance are in shades of red and support are in shades of green. The darker the shade of red or the darker the shade of green, it means that the stronger the support and the stronger the resistance is. How the TFA Sniper how the TFA Fractal Support and Resistance Indicator works is that it scans for swing highs and it scans for swing lows, and it finds areas where they react off each other. An example is here. You notice this is a swing high, and it detects that another swing high has reacted off it, near it, and hence it highlights this entire area as a level of resistance to watch out for. This can be seen here too. A swing high occurred here, a second swing high occurred here, and a third swing high occurred here. So the more times price react off swing high levels, the stronger the resistance will be, and what the indicator does is it highlights the entire area. The stronger it is, the better. The last example we're looking at is over here. One swing high occurred here, a second swing high occurred here, and a third swing high occurred here. Because of the many times the swing highs occurred, it resulted in a very strong, very dark red color, meaning that this is definitely a strong area of resistance to look out for. Alright, so moving on, before we go into detail a little bit further, I guess what I'd like to do is to explain how explain more on this on the settings of the TFA Fractal Support and Resistance Indicator. You'll notice that in this yellow box here is a graphic user interface, a GUI, that allows you to tweak the settings of your fractal support and resistance indicator, and from there you can make your settings stricter, or you can make it make it more flexible to find areas of support and resistance. Now I will go into detail explaining what each of these settings mean. And so the first thing we'd like to touch on is swing sensitivity. You see here, swing sensitivity. A swing sensitivity of 30 means you are looking for swing highs and swing lows that are at least 30 bars strong. For example, if you see a swing low here, to be considered a valid swing low by the fractal support and resistance indicator that we have, there needs to be 30 bars on the left and 30 bars on the right that are higher than this swing low. So that's the definition of a swing low. For a swing high here, to be considered a valid swing high, there must be 30 bars on the left and 30 bars on the right which are lower than it to be considered a valid swing high. So for every swing high and swing low here, you can be sure that this swing low, this swing low, this swing low, and even this swing low, all of them have 30 bars to the left and 30 bars to the right, a minimum of 30 bars to the left and to the right, which are higher than it. That's why the TFA Fractal Support and Resistance Indicator identify them as valid swing lows. The same goes for the swing highs that you see here. And it is important to have a substantially high value of around 30, because if you adjust this to maybe 5, you're going to see a lot of chaos. Here's an example of it. There you go. With a value of 6, every single level is a swing high, every single level is a swing low, and this doesn't tell us anything. If you look at this chart here, basically it's telling you that the entire area here is resistance, the entire area here is support. This doesn't add any value to our analysis. And this is a mistake that many other support and resistance indicators highlight. They do not help you consider that on ways to filter this. All right, so moving on, this is one of the reasons why it is here at the Forex Army, we realize that any value above 30 tends to be a relatively good value to use to filter swing highs and swing lows. And moving on, the next thing we want to look at is initial pips. Initial pips basically mean when the first swing high occurs. These are when the first swing high occurs, what the indicator would do is it will scan for another swing high within 4 pips of it. So in this case, 4 pips up and 4 pips down. So this swing high occurred, and you can see that it is scanning within 4 pips up and 4 pips down for another swing high. And bingo, it finds a second swing high here, and it becomes a stronger level of resistance. The same happens here. The moment the swing high occurs, it scans 4 pips up and 4 pips down for the next swing high or the next swing low. And it hits it right here. And the moment it occurs, this becomes a stronger area of resistance, right? So after this happens, this entire area here is now highlighted as a stronger area of resistance. This and for here, this example, this entire area here is highlighted as a stronger area of resistance. The initial swing high, the initial pips basically means that from the very first, the very first swing high that occurs, what the indicator does is that it scans 4 pips up and 4 pips down for the next support, for the next swing high or swing low level to coincide with. Further pips, I'm sure you can't see it, but the word here is actually further pips. Further pips basically means that, let me see, yeah, there you go. Further pips, the word further pips is here. It basically means that after the first swing high meets the second swing high, from the second swing high onwards, here for further pips, from the second swing high onwards, how many pips will it scan for? Above and below. So in our earlier example, this was swing high number 1, this was swing high number 2. Correct? So it was scanning 4 pips up and 4 pips down until it hit this level here, and then it highlighted this as the strong area of resistance. The moment this occurs, from the second swing high onwards, moving on all the way, what it does is that it looks for the next swing high or the next swing low. It will scan 3 pips up and 3 pips down. So from here onwards, it actually scans another 3 pips up and a 3 pips down, and it just so happened that it meets this swing high resistance right here. And because of that, it says, hey, okay, first we have the first swing high met the second swing high, so this is a strong area of resistance. And from the second swing high, it meets the third swing high, and it's saying, all right, this is not only a strong level of resistance, it is a very strong level of resistance. Let me highlight it in red so that I can emphasize the strength of this resistance. This can be seen here too. In this example, the first swing high is here. It meets the second swing high, and from there it scans for a third swing high. So the more swing highs it meets, the stronger the resistance is. Alright, so this explains the initial pips and the further pips that we talked about. The next thing I want to touch on is broken count and broken bars. Okay, so you can find the broken count and broken bars value here. What broken count means is that how many times will you allow a swing high or swing low level to be broken. If you have a value of, in this case, if I adjust this value to 0, this means that every single support and resistance level you see here, has not been broken a single time, 0 times, right? So this means this basically sets a strict criteria that you will only consider support and resistance levels which have not been broken a single time. If we increase this value to 1, you can immediately see that this here was this swing high was broken once. This means that you're telling the indicator, all right, sometimes I believe price might break this area of support or resistance once, but it's okay with me. One time is fine. Correct? Just to put this to an extreme example, if we have a value of 10 or 11 here for the broken count, immediately you'll notice that things get really messy. You can see how here there was this swing low that was broken once, broken twice, broken 3 times, broken 4 times, 5, 6. It was broken 6 times. Now, is this a resistance you want to trade off? In my opinion, no. This is definitely not a resistance you want to trade off, because price has broken it so many times. It is clearly not a strong level of resistance. So using a broken count value of 11 is just to illustrate, better help you understand why keeping the broken count low is good. We don't, personally at the Forex Army, we don't keep it at 0, we keep it at 1, or we keep it at 2. We find that it is still fine if this value is 1 or 2. Personally, I prefer a value of 1. The next thing I want to touch on is broken bars. Broken bars basically tell you when price breaks, when price crosses a resistance line or a support line, how many bars will you allow before you consider it a valid break? The reason for this is that sometimes, imagine we're looking at this resistance level here, correct? But looking at this resistance level here, it looks so strong. What happens if price comes all the way here? It comes all the way to here, and it forms a doji, a really big doji. Now, what does it tell us? A doji is a very big sign of indecision. So if a doji, as a candlestick formation basically, is formed right at this level, it tells us that it could potentially see a very big, strong move down. Correct? Because there are a lot of people trying to push price up and then pushing price down. So if we have a broken count of 0, the moment this happens, the indicator will say, all right, since we are keeping a very, very strict criteria of a broken bars count of 0, as seen here, that means that the moment any bar closes, crosses above this line, we have to invalidate this entire area of resistance. And that to me is a tremendous waste, because if a strong doji is formed here, it means that we are at this area of resistance. It means that we have a very high chance of seeing price make a strong push down from here. Correct? So in this case, the best thing to do is to keep a broken count of maybe 2 or 3. That will mean that if doji is formed here, 1 bar, 2 bars, 3 bars, it still shows that price is testing resistance at this level before it makes a push down from there. That allows us to catch the trade. So we don't want to invalidate our resistance and support levels that quickly. We want to give it a little bit of space. If usually 2 or 3 bars when price is testing it, to make sure that price is not trying to fake us out, not trying to trick us with his price action, and so that we'll be able to find filter the best trading opportunities for ourselves. All right, so now that I've touched on almost every setting there, the last thing that I want to touch on is toggle strength. Toggle strength, which you see over here, is basically toggles the strength of the indicator. Any swing high or swing low which only has a value of 1 meaning that it has not coincided with any other swing levels. For example, just let me draw this out for you. This one here, there's 1, there's 2, so that means the swing count here is 2. This has 1, 2, 3, 1, 2, 3, so it has a swing count value of 3. It's strong. This here, 1, 2, 3, so it has a swing count level of 3. So all this has swing count levels of 3. This has 1, this has 1, so all these have swing count values of 1. If you only have a swing count value of 1, to me it says that, you know, that is not a very strong area of resistance or support. So the moment we click toggle strength, you notice all those swing highs and swing lows with a toggle with a value of 1 will be taken out, and we just focus on the strong areas of support and resistance as seen here. Okay, so that basically covers the various settings. A few things I want you to take note of is that if you're using the 5-minute chart, it's alright to use an initial pip count value of 4 and 3. You know, a low count value is good because on a 5-minute chart, you know, the fluctuations in price is smaller, so value of 4 and 3 is fine. However, if you go up to hourly chart, you notice that you can hardly find any strong areas of support and resistance. Here, if you ask me, is actually a strong area of support and a strong area of resistance. However, because we're using an initial pip value of 3 and a further pip value of 3, the indicator is not able to detect this. So my personal recommendation is that if you go to an hourly chart, a good thing to do is to have values of above 20 for initial and further pips. The moment this happens, you'll notice that this has been highlighted to a strong area of resistance. This is all along I've been talking about swing highs connecting together to form areas of resistance, but my personal favorite is when a swing low combines with a swing high, and this comes up with a very strong area of resistance on what we call a pullback resistance. Personally is my favorite. Okay, so for hourly charts, just a thing to take note of, remember to increase your initial and further pips value to above 20. If you're going to the 4 hourly charts, then a better value to use for here is 50, if any value above 50, as you can see here. When you have adjusted the value above 50, then the indicator will be able to detect better areas of support and resistance for you. Okay, now that I have covered all the various settings on the TFA Fractal support and resistance indicator, I would like to teach you other ways that we employ here at the Forex Army to filter and find even stronger levels of support and resistance. Here's an example. What you see here is the 4-hour chart. You find various levels of resistance and support. Okay? One of the favorite tools I have is the Fibonacci Retracement. You can find it over here, Fibonacci Retracement. It is right at the top, right here. Depends on your platform, but usually can find it right at the top. What I do is I draw a big Fibonacci retracement all the way from the top. You know, with the swing highs and swing lows identified for you, it's much easier to find. Where to draw your Fibonacci retracements from. So imagine I draw one right from the top. All right, the first level I want to look at. If you take a look here, this is the 62% golden ratio retracement. This is the 50%. All right. So I notice on the 62%, there is a swing low here. It coincides with my 62%, and this gives me a very strong area of resistance. And this is definitely a level I will watch out for when I'm taking a short trade. Okay. Similarly with the 50%, I will notice that this is a combined level of resistance with one swing high, two swing highs, giving a strong area level of resistance, and it also coincides with a 50% retracement on the Fibonacci. This tells me this is also a good level to trade off. So these are all trading opportunities you can look out for. After that, you can also zoom in further. You take a Fibonacci retracement on the smaller swings, and immediately you notice that right here, this 62% here coincides with this area of resistance here. So this tells me that we have a strong area of resistance over here. So if price were to rise up to this level, if price were to make a push up from here to this level, I would definitely take a trade off here. Now, this you can combine Fibonacci retracements, Fibonacci projection levels. Sometimes it's a bit tricky on how you want to take these Fibonacci retracements and how to plot them correctly. But if you just swing by the Forex Army website, you will be able to find tutorials on how to draw proper Fibonacci retracements and projection levels. All right, so okay, now we notice that at this exact level here, there is a Fibonacci retracement of 62%, which is by itself usually a strong indication of a reversal of price. We notice that there is a swing low here. There's a second swing low here. Oh, that's a horrible arrow. Yeah, second swing low here. So we have 1, we have 2, and we have 3 elements lining up really well here to tell us that this is possibly going to be a very good level to take a short trade from. If you want to take things one level up, the moment price reaches this level right here, what we want to do is we look at 2 more things. We look at the RSI and we look at this stochastic. Goodness, my handwriting is pretty bad. Nah, actually it's not that bad. All right, we look at the RSI and stochastic. If the RSI and stochastic are in overbought areas, then that could potentially give us a 4th and a 5th confirmation that we might be seeing a reversal from here. So how we have it at the Forex Army is that if we have 1 level, we might not take the trade. If we have 2 levels, maybe we risk 0.1%, 0.1%. Oh, that's horrible. Okay, 0.1%. If a Fibonacci level combines with it, we do 0.2%. If there's RSI, we do 0.3, and if there's a stochastic, we do a you risk 0.4% of your account with this trade. The more confirmation levels you get, the more we are willing to risk on a trade. That's just how it works. And that is proper trading management. Not all trading opportunities are equal. Some trading opportunities are better. Some trading opportunities are worse, but they're all trading opportunities to consider. So it's important to have a proper methodology moving forward. And this is just an example of how we take these trades at the Forex Army. Furthermore, on top of this, all these different indicators I've told you, we have our proprietary TFA Sniper. This is the multi-time frame Fibonacci matrix that we have. You'll notice that over here there are 7 time frames, the 1 minute, 5 minutes, 15 minutes, all the way to the daily time frames. And the indicator basically looks for multiple levels of advanced Fibonacci levels. All these are indicated by the boxes, the dark blue boxes and the orange boxes. So when they are all combined together, like in this area here, notice that on 7 time frames we can find Fibonacci levels. On 7 time frames we can find Fibonacci retracements and Fibonacci pivot levels. This tells us that this is definitely a strong resistance level to look out for. We combine the information we find here with the information we found earlier on the fractal support and resistance indicator, the RSI, the stochastic, the Fibonacci retracements. We combine it all together along with finding the momentum of the market, whether we're in a bearish movement or a bullish movement. and this tells us how good a trade is. All right, so just a quick touch, a bullish flag formation means that price, you notice, is making a bullish, is in a bullish dynamic across every single time frame from the 1 minute to the 1 day. 1 day time frame, price is pushing up, and this tells us that, like, for example, Aussie dollar is very bullish, and we can be expecting a much further push up from here. Well, anyway, not to digress too much from my initial explanations, I hope you have, through this video, you got a better understanding of how to find support and resistance through swing highs, swing lows, Fibonacci retracements, RSI, stochastic, and in our case, we have the TFA Sniper. When you combine them all together, you can find better areas, better trading opportunities. Some trading opportunities are good, and some trading opportunities are better. So you risk, depending on how good they are, you risk different sizes of your account for each trade. That is proper trade management. All right. So if this video has benefited you in any way at all, I hope that you will leave a thumbs up on our YouTube video. If you have questions, please post them in the comments box below, or you can always swing by our live trading room at www.the-forex-army.com/live-forex-trading-room. And over there, we are utilizing all these strategies day after day and finding the best trading opportunities to trade off. And you can always join us there, ask questions there, clarify any doubts or any queries you have, and we'll be more than glad, as an army of and a community of people, of helpful traders, to help you do better. All right, so that's it for me. Until the next video, peace out.